Okay, so $18 billion, 2 deals, 1 week.
The K-shaped market is very much doing its thing.
Hapag-Lloyd swallowing Zim for $4.2 billion, Nuveen chasing Schroders for $13.5. And you're sitting here calm about this?
I mean, shipping consolidation makes sense. Asset management consolidation makes sense. These aren't crazy.
Nate, Nestlé, quietly kept the profitable coffee business and is offloading the stores for a loss.
Okay, that one's spicy.
That's the story. Everything else is coming up. The rundown.
Okay, so Hapag-Lloyd buying Zim for $4.2 billion. Shipping consolidation makes total sense. Boring headline, huge deal.
Not boring. $4.2 billion is the largest shipping sector deal in years, and everyone's just glazing over it because boats aren't sexy.
Boats are never sexy, Maya.
The margins are, though. Moving on, Nuveen chasing Schroders for $13.5 billion, all cash. That one I did not see coming.
$13.5 billion, all cash in this rate environment? Someone's feeling confident.
Or desperate. Those 2 deals together are nearly $18 billion, and we haven't even gotten to the mRNA drama.
Oh, the mRNA drama. BioNTech swallows CureVac whole. Stock for stock, CureVac shareholders get BioNTech paper. Company ceases to exist as a public entity. Done.
And nobody blinked. That's what happens when your rival's pipeline loses the narrative and yours doesn't.
Survival of the mRNA.
Please never say that again. Okay, Nestlé and Blue Bottle. This one I love because it's so quietly embarrassing.
Right, so Nestlé paid reportedly around $500 million for a majority stake in Blue Bottle back in 2017.
And now they're selling the retail stores for less than $400 million to Centurium Capital, apparently in advanced talks.
But, and here's the good part, they're keeping the consumer goods side. The cans, the beans, the supermarket stuff.
So they're dumping the cool, expensive coffee shops and keeping the part that actually scales. That's not a retreat. That's a confession.
It's a very Swiss move, actually. Very practical.
We bought a vibe and we'd like our money back.
And then there's Miri Asset buying a 92% stake in Corbit, the South Korean crypto exchange, for $92 million.
92% for $92 million. The symmetry is almost suspicious.
I choose to believe it was intentional. Financial players betting on regulated crypto infrastructure, that's the theme right now.
It is. And it connects to something bigger that we need to get into. Because McKinsey's calling this a K-shaped market, and I have thoughts.
Oh, she has thoughts. Okay, let's hear them. The big one. Okay, so Hapag-Lloyd buying Zim for $4.2 billion. I have been waiting for someone to pull the trigger on this.
It's been coming. The shipping sector has been screaming for consolidation since freight rates normalized. But $4.2 billion is still a number that makes you sit up.
And look, Hapag-Lloyd isn't doing this because they love the Israeli flag. They're buying market share. Zim has been punching above its weight on trans-Pacific routes, and Hapag wants that coverage.
Right, but here's what I keep coming back to. Zim's stock has been a roller coaster. We're talking a company that was printing money during the pandemic shipping boom and then got absolutely humbled when rates crashed. So the timing question is real. Is Hapag buying at the right point in the cycle?
Or is this exactly the right time? You buy when the target is bruised, not when they're flush?
Classic banker answer.
I know, I heard it as I said it.
But fine. Strategically, yes. The logic tracks. You're not going to get Zim cheaper than this. My issue is the integration. These are 2 very different operational cultures. Hapag is this massive German machine. Zim is scrappy, fast-moving.
Culture clash in shipping is less fatal than culture clash in, say, software. You're moving boxes. The boxes don't care who's in charge.
That is either profound or the dumbest thing you've said this week.
Genuinely could be both.
Okay, but here's the number that actually stopped me. You zoom out, Hapag-Lloyd plus Zim, and then you layer on Nuveen reportedly going after Schroders for $13.5 billion. We are looking at nearly $18 billion across just 2 deals. McKinsey's calling this a K-shaped market right now. Megadeal's booming while mid-market volume sits flat.
The big keep getting bigger. And honestly, that Nuveen Schroders play is the one that deserves more attention than it's getting. $13.5 billion, all cash, for one of the most storied names in European asset management.
All cash. That's confidence. Or leverage. Possibly both.
Probably both.
Nuveen is essentially saying we want global distribution, we want Schroders client relationships, and we want them now.
Which means whoever loses this bid, and there will be other bidders, they're going home empty-handed in a market where the good assets are disappearing fast.
Speaking of assets disappearing, Nestlé is quietly unloading Blue Bottle coffee, and the numbers on that one are genuinely embarrassing for them. Voices. Okay, so McKinsey dropped their M&A outlook, and they're calling this a K-shaped market. Megadeal's booming, mid-market basically flat.
Which tracks perfectly with what we're seeing today. Hapag-Lloyd swallowing Zim for $4.2 billion, Nuveen chasing Schroders for $13.5 billion. The big are absolutely getting bigger.
And then PwC piles on saying AI is the defining force behind all of it. Technology reclaimed the top spot in deal value. Buyers treating AI capability as a core strategic asset.
Core strategic asset. I love that. That's banker for we panicked and bought something.
Sometimes, but not always. I'd push back a little here. Some of these acquirers genuinely need the capability. They're not just slapping AI on a press release.
Name one.
I'll name one later when I have more coffee. The point is the PwC framing isn't wrong, it's just incomplete. AI is the narrative. Cheap debt plus fear of falling behind is the actual mechanism.
Okay, fair. But here's what I think is the real story nobody's saying loudly enough. Private equity is back. PE deal values surged 54% to $1.2 trillion in 2025.
That number stopped me cold when I read it.
Right? And they're not doing the spray and pray thing anymore. Fewer bets, bigger bets. Which is exactly what you'd expect from firms sitting on massive dry powder. I don't know who got burned chasing volume in the low rate era.
So discipline born from pain.
The best kind.
Look, all three of these frameworks, K-shaped markets, AI as strategic necessity, PE consolidating, they're all pointing at the same pressure. Scale or get acquired.
Which brings us perfectly to Blue Bottle, because Nestlé apparently missed that memo. Spill the tea. Okay, Blue Bottle. I need to talk about Blue Bottle.
Please, go ahead, unburden yourself.
Nestlé paid $500 million for a majority stake in what is essentially a very pretty coffee shop in 2017, and now they're offloading the retail stores to Centurium for less than $400 million.
Less than $400 million. That's before you even account for 7 years of carrying costs.
It's a bad trade. But here's the thing. They're keeping the beans and cans business, the ready-to-drink lines, the consumer goods side.
Right, so they quietly carved out the profitable part and are selling the Instagram aesthetic.
They're selling the vibes. Nestlé is literally selling the vibes and keeping the margin.
I mean, respect the ruthlessness a little.
Okay, fine. Grudging respect, but whoever greenlit $500 million for Blue Bottle in 2017 had a very different vision for what that brand was going to become.
That person is not getting credit in the press release, I'll tell you that.
Ha! No, they are deep in the footnotes. Speaking of things that should stay in footnotes, Sphere 3D is trying to acquire Cathedra Bitcoin.
A 3D virtualization company.
Buying a Bitcoin miner.
Via M&A.
Because why have a coherent corporate identity when you can just acquire one?
That's not a pivot, Nate. That's a full personality transplant.
Bankers are absolutely having a field day with that deck.
I'd love to see the synergies slide. I genuinely would.
Virtualization meets decentralization. Someone wrote that with a straight face.
Okay, speaking of faces, Denso reportedly making a move on Rome, and suddenly Japanese auto supply chain M&A is very much not cooling off. We should get into that. Tomorrow's radar. Okay, quick radar check before we get out of here. Nuveen Schroders. Watch for any formal confirmation tomorrow. Shareholders already greenlit the BXMX and DIX consolidation into SPXX, effective date before March 30th.
Which could literally be any morning you wake up and check your phone.
Exactly. Also keeping eyes on Blue Bottle. Centurium talks are advanced, which in deal speak means someone's already arguing about escrow terms.
I'd argue Nestlé drags this out. They're in no rush.
You said that about CureVac 2 weeks ago.
And I was wrong then too. Fair.
And on CureVac, watch for BioNTech to say something about integration. The delisting's done, the company's gone. What happens to the pipeline is the actual story now.
That's the part nobody's asking about yet.
Which is exactly why we will. Tomorrow's shaping up to be busy.